Hi guys, I'm going to continue my series now on trading price action. So we're going to have a look at some price action principles and a way that you can devise a strategy to trade price action in as predictable a way as price action will allow us to do. Okay. Short-term trading isn't easy, but there are principles that you can use that will enable you to take trades long or trades short with a reasonable probability of success. Now, like any skill, it takes practice to be able to understand what you do and when. And I'm talking about strategies here. I'm talking about using your brain at the right time to make the right decisions. Now, these sort of things you can train your brain to understand what's happening and take action at the right time, but only after practice. You know, it takes a lot of practice and a lot of discipline, but the first stage is understanding how markets work, when the market's in the right place to take opportunities when they come along. And so I use the principle of the 3 C's. This is something that I've devised over time. And the 3 C's are context, content, and confluence, as you might know if you've watched some of my videos before. Context: where is the price in the context of where it's been in the past? What is the content within the candlestick bars? And what else tells me that the market is going to go in the direction that the context and the content would lead me to believe? So the 3 C's. And once you've got all things saying the same thing, then you've got a trading opportunity. Okay. And trading opportunities are never 100%, but when the probability is good over time, if you're taking the same sort of trades, then you've got a successful system if you operate it with discipline. Now, it's a question of training your brain to understand where price is in its cycle, and there are certain principles that go along with that. So I'm going to talk you through that right now. Right, so this is the 2-minute chart on the DAX, and I'm going to take you through this week of trading. This is Monday the 3rd of May that we're looking at now. If you've got any questions, let me know. Do go ahead and subscribe. I've got more of these videos on the way. And at the bottom, I've got the ATR, the average true range. So I've chosen the 2-minute chart here because this is largely what I was trading this week. This was my trading time frame for the week, and the reason for that is because the ATR on the 1-minute chart wasn't quite at the right level. It wasn't high enough, and it was okay on the 2-minute chart. It fit the requirements that I have for trading and the volatility that is available on the trading time frame. So the ATR is the range, the size from high to low on average of the bars, and it was above 7 and on the 2-minute chart, and so that's okay for me with the charges that my broker makes for the sort of volatility I'm looking for. It was below 7, of course, on the 1-minute chart, so I wasn't trading that time frame for most of the week. Right, so let's have a look at this. This is a really panned out view of the price action. This is here 8 o'clock Monday morning, and that's Monday and Monday's trading. So you can see big dip, came back up. Okay, so you know, what do we do? Do we go to the daily chart and have a look at that and see where we're looking? Well, no, we don't. What I'm actually doing with this strategy is I'm taking short-term opportunities, okay? And there's enough information actually on this chart for me to take trades. I do use higher time frame charts. I'd often use a time frame that's 10 minutes, so 5 times the 2-minute time frame as a master time frame, as you may know, and that's that's reliable. But for this illustration, I'm just going to use the one chart to keep it nice and simple to show you the trading opportunities, the type of trading opportunities that I'd look for within the price action that we've got here. So the only other thing that I've got on the chart is the red and the blue lines here, which are the EMAs, 8 EMA being the blue line and red being the 20 EMA. Okay, so in between, the area in between the EMAs, I call the value zone. Okay, this is where price reaches a value short term based on what's been happening in the past, in the short term past. And when price goes above value and pulls back, institutions will buy. When price comes down below value and pulls back up and enters the value area, institutions will sell. Okay, you can almost, you get a sense of it when you're looking at live price action, but you can see the orders going in because the price moves quickly away from these areas. So I use these as my trading opportunities. Okay, so let's have a look. 8 o'clock Monday morning. Okay, here we go. So price has been above the EMAs and it's been pulling back down and moving up, bouncing if you like. So the 8 o'clock bar was here, this area here, and this candlestick, this big green candlestick here, and it's above the EMAs. It goes back down into the value area and closes below it. So we wait and see. Now, what you can see is, of course, you can see the price bouncing from the value areas up and down. And what you can also see here is that when the price gets a long way away from the value area, it pulls back to it. Now, it either goes directly back, so in this case, miles away, up above the value area, and it doesn't come directly down, but it could have done. It basically waits for the value to catch up with the price action, and when that happens, very often, as long as you're getting higher highs and higher lows, then price will bounce up off the value area. Okay, same principle on the way back down, comes back down, level pullback allows the value area to catch up, and then it comes down off the value area. So these, when the price is at value, in the value zone, in between the two EMAs, that's the type of trading opportunity I take. And you can see from the chart just how many opportunities there are. And I don't stay in trades forever, I will take on this case, probably two candlestick bars here, and then I'm out, and I'm out for a profit. And I let price come back to the value area, and then I'll go again for 2 more bars. And this is the way to take, quick profits, pay yourself as you're going along, and trade with discipline. Basically, the discipline is when price is away from value, there's no trade. When it comes back to value, that's when I'm interested, and that's when I'm trading. In this case, that's a long trade. 8:44 on Monday. These principles apply to every market, every time frame. So there are things happening on this 2-minute chart that do also relate to a higher time frame. But if I'm looking at the daily chart and I'm taking trades based on that, on a day trading based on that, then I might have to wait a long time. And this type of trading that I'm showing you here satisfies my desires. It's quick in and out, short and long. So on this occasion here, down the bottom here, what happened? You got a reversal down here. At the top here, you got a reversal. So we're looking at, you know, these candlestick highs. Are they making higher highs? Yes. Higher highs? Yes. Higher high? No. Lower high. And there's the low. So lower low there. EMA's price went across the EMA with a big engulfing candlestick and then started bouncing down, and it entered the value area here. So I did nothing in between here apart from take my profits. Did nothing, waited, price comes up, and there's your opportunity in there. That one there, that tiny little bar there is a reversal candlestick pattern in a good area, and 2 bars, nice profit, probably 4-to-1 reward to risk in there, and then the price comes down, gets quite close to the value area here, and you've got short trades. Again, long way down from the EMAs here. Allow it to come back and then in short again and again. And as long as you're getting lower lows all the time in here before the pullback, then you're good to go short, aren't you? You can see that, I'm sure you can. And so carry on, and then you got right to the bottom here, and what happened was you got a very, very slightly higher low, and then a big strong pullback. 1, 2, 3, 4, 5 green bars on the trot, and then price is now above the value zone and pull back into the value zone and pull back out, and now you've got the EMAs crossing over, so you've got the blue line above the red line and price down at the value area here at 11.12, and then we're looking for longs back from the value area, and you're getting higher highs all the way along here, just almost a level high in there, and then long again until you get a lower high here, and that changes things again. So we're looking for higher highs in an uptrend, we're looking for lower lows in a downtrend, and as long as we're getting those, then we're looking for the value area to provide us with opportunities and candlestick action within these opportunities to take very short-term trades down. Okay, you can see, you know, this thing happens. This is overnight, so the ATR is very low at this stage, 2 to 4, and anyway, the price for trading, the charge for trading goes up in overnight trading. So we wait for the market to open, and here's Tuesday, and so again, same principles. Price goes down below the EMAs and starts bouncing down, taking opportunities from the value zone after lower lows and then coming out, and then this time you got a higher high, so we have to wait for consistency again. That's a lower low but a higher high. There was a trading opportunity there. That's because you've got a lower low, higher high but no higher low at this time, and price came down. High below the value zone and short, and 2 bars, like I say, 2 bars. So these trades are lasting 2 to 3 minutes, not long. And then you take your profit, whatever you've got, and then price starts going up, goes above the value zone, and we're looking for consistent higher highs as price goes up, taking trades from the value zone, and then you get a dip down here below the value zone. Okay, but we've not had a lower high at this stage, so we wait. Price goes up above the value zone and starts bouncing again. Okay, and you can see this happening throughout the days. Okay, what happened here? You got a lower low, that's a low, lower low, and then a higher low. Price started going up, and then you got the US Open 230, and you very often get, you have to watch out at this time because you get reversals, and they can sometimes be unsignaled reversals. So the price started going up from above the value zone, but look at this one here. You must wait for bars to close. You must wait for bars to close before you make your decision. Now here, that's above the value zone here, bit of a gap. Price comes back down below the value zone, so it didn't close. If it closed above the value zone, then I'd wait for a little move down on the next bar and take anything that goes green after that and expect it to go up, but it didn't. It got a big strong red bar which closed below the value zone, and then look at this bar here. This is a little pin bar, tail on the top, wick on the top, almost closed on its low below the blue and the red EMAs, and then short. Now you're looking for trades where you've got protection for the market going in the other direction from where you want it to go. And what I mean by that is this value zone offers support and resistance. Okay, taking a short here was ideal because you've got a blue and a red support and resistance line in terms of the EMAs, and if price closes above here, then you've got a loss and you're out. But of course it didn't. It reacted to the support and resistance and it went down. Here, let's have a look. Big green bar, but not doing anything because it's still the value zone is basically where price is, but we're not going short at this point in time. We're waiting for a lower high and then short. We're not going up because we've got to cross over convincingly over the lines in order to consider that. And again, market starts rejecting down from the value zone until it doesn't. You get a here, you get a low. This is overnight anyway, but same principles apply. You get a lower low, so low, lower low, and then a higher low. Price goes above, EMAs cross over, and then it starts rejecting up above. And they're the principles you want to start looking at. Test them out for yourself, trade the demo until you get profitable on the demo, and take a look at other charts. Take a look at, what's your favourite market. I trade the Dow Jones as well. Same principles apply. The Nasdaq, the Ftse. The Ftse's got very low volatility. Have a look at this. This is, let me have a look. Just go down to one chart. This is the 5-minute candlesticks on the Ftse. This is Friday, and 5 minutes, the same principles are applying. You've got lower low in here, price goes up, makes a higher low, goes up above the EMAs, and then there's a zone in here which is providing trading opportunities long until it goes down below the value zone, and you get a big strong move down below. You wouldn't take trades long in here because you're in between the upper resistance level and the lower resistance level. As price comes down, you're below, and so you're in between, and therefore you've got a resistance level above, a support level below, and price might oscillate in there, and that doesn't provide trading opportunities. Wait until you get trading opportunities. You've got consistency when price is closing below both or above both of those lines, and then you can start looking for trades. And the same principles apply all the way through the day. And as long as you've got sufficient volatility, let's just have a quick look at the ATR on the 5-minute Ftse, and there you go, it's not high enough. So this is the 5-minute chart. The ATR is 2 just before the open, and then at 8 o'clock goes up to 3. Well, I'm looking for 7 plus, and it doesn't make that until 1 or 2 bars here when the US Open takes place at 2:30. So actually 5-minute chart on the Ftse, not volatile enough for me, don't often look at it, and I need to look at a higher time frame, and there you go, now you've got 10-minute chart on here. And I don't want to be sitting around all day, so I don't often trade the 10-minute chart, and there's not a lot happening anyway, but when it does happen, you get your bounces from the value zone. I hope you found that really useful. This is fantastic stuff, isn't it? My name's Anthony Beardsall. Hope you enjoyed that, and I'll catch you on the next video. Or do contact me if you want some coaching, interested in a proper trading, structured trading course. I've got those, and I'd be delighted to help you create success. Cheers for now. Bye.